Hello everyone. So in this PPT, I will be discussing about the significance and establishment of business organization. This is Unit 4. So talking about business first. So business means an institution organized and operated to provide goods and services to the society under the incentive of private gain. Business may be defined as human activities directed towards providing or acquiring wealth through buying and selling. So here they have mentioned that business may be defined as a human activity. So correct, business is being done by human being only. So and what activities they perform? They purchase the product, then they sell the product. There will be production of goods and services in order to earn profit. Therefore, business may be defined as an economic activity involving the purchase, production, and sale of goods and services with a motive of earning profit by satisfying human wants. Now understand, suppose by satisfying the human wants, the profit is being earned. So there is a chain. If the customers are being satisfied, they will going to purchase more from the business. Therefore, the business will be earning more profit. Economic system. Now business has been defined as an economic activity or an economic system. Why this term economic is being used? So whenever there is any kind of monetary gain in activities, those are known as economic activities. So same thing is being mentioned here. Economic system in which goods and services are exchanged for one another or money on the basis of their perceived worth. Then what do businesses do? So business process input to create goods or services. Now the difference between goods and services is goods are in tangible form, whereas talking about services, they are in intangible form. Further, goods are being divided into two parts. The first one is consumer goods and the second one is capital goods. Consumer goods are purchased by general public, whereas talking about capital goods, these are purchased by businesses. Let me give you an example. Suppose you are purchasing a furniture for your house. So that will be a part of consumer goods because you are purchasing for your own use. Same furniture is being used in an office. That will be the part of business. So understand, the product is same but the utility is different. Then comes the characteristics of business. So the first one is economic activity. So again, business involves engaging in economic activities such as production, distribution and exchange of goods and services to generate profit. Profit is there, that is why business is being termed as economic activity. Next one is element of risk. So again, business is associated with risk and uncertainty. Normally what happens, we say higher the risk, more the profit. So now from where this risk will come? The risk may come from market fluctuation, then competition or change in the preferences or taste and preferences of the consumer. Uncertainty of return. Return means the outcome of your business activity. So there is no guarantee for a specific return on investment. Profit earning. So the objective of business is to earn profit, but how? By selling goods or services at a price higher than the cost of production. Apart from that, they can also earn profit by satisfying the consumer needs and preferences. Next one is dealing in goods and services on regular basis. So correct, business is a continuous process. So you have to be regular in dealing with goods and services. This is not one time process. Continuously on a regular basis, this activity have to be conducted. Then comes sale of exchange of goods and services for the satisfaction of human wants. Yes, So business aims to satisfy the need and want of consumers by offering product or services that fulfill their requirement. Sales, then production or procurement of goods and services, as they meet, so basically production or procurement of goods and services means that how businesses engage in the production of goods and the procurement of services to meet the market demand and generate revenue. Next one is continuity in dealing. So same point as discussed earlier, and again the economic activity. Then the next one is significance of business. So the first point is supply of goods and services. So supply of goods and services means that business produce and sell goods and provide services to the society according to the needs and demand. Next one is harnessing the capital and other resources in production. So it means that business collects savings from different individuals and uses them to invest in productive activity, utilizing the natural resources to create value and then to generate output. Third point is self-employment and provision of employment. So this means that business provide self-employment. It means employment for the owner himself or the businessman himself. Further, that particular businessman will be providing employment to some other person. Next one is preservation and optimum utilization of resources. So utilization of resources becomes one of the most important point when it comes to business. So how businesses focus on preserving and efficient utilizing of limited resources by maximizing the productivity and minimizing the waste. Research, development and innovation. Now businesses conduct research development, and on a regular basis research is being done so that the businesses can get to know about the market demand, customer preferences. Development as in development in the product, and innovation as in to be more creative, to be differentiated from the competitors. Next point is income generation. So again business generates income. How? For individual through employment, entrepreneurship and investment, providing financial well-being and economic stability. Then comes the increase in national income. Yes, the businessman, if the businessman will going to earn, that particular income is being added to the GDP, therefore the national income increases. Contribution to social development. So successful business contributes to social development. How? By paying taxes. Further, that these businesses support corporate social responsibilities initiatives and investing in community development project further. Next one is contribution in the development of education, science and technology. So business support the development of these kind of contributions, such as in the contribution of education, science and technology, which further leads to advancement and improve in production process and enhance the human welfare. The last one is development of international relation. So business imports necessary commodities and exports new or surplus product to foreign countries. In this way, a foreign relation develops. Now, the next topic is establishment of business organization. So a person who wants to set up a business has to consider what legal form of organization takes. So there are different factors that or different decisions that a owner have to take before starting any business organization. So the first one is how many owner the business is going to have, whether they want to have only one single owner or they want to have more than one owner. So first they have to decide this point. What is the tax position of the business? So here we are talking about the taxation system, how much tax will they have to pay accordingly. Can the owner take the risk of unlimited liability? So let me explain the meaning of unlimited liability first. So there is limited liability and unlimited liability. So limited liability means, let me explain the meaning of unlimited liability first. So unlimited liability means, suppose if there will be any kind of losses which are being incurred by the business, then what happens, that the owner have to sell off their personal property so that the amount can be utilized to pay off the liabilities of the business. That is unlimited liability. Whereas if we talk about limited liability, it is completely opposite from unlimited liability. Here, the personal assets are not being sold off in order to recover the losses. But in case of unlimited, those assets have to be sold off. Does the owner want all the business profit? In the case of owner illness or death, what will happen to the business? So these are some of the factors that will influence the decision. Now, so there are different forms of business ownership: sole proprietor, partnership, joint stock company and cooperative societies. The first one is sole proprietor. So the term is mentioned here, sole. Sole basically means single and proprietorship means ownership. So sole proprietor means single ownership. So this means that a form of business organization in which a single individual owns and manages the business, takes the profit and bear the losses, is known as sole proprietorship form of business organization. A sole proprietor business is owned by one single person, so ultimately they have to face unlimited liability, that is that their personal assets have to be sell off in order to recover the losses. Then comes the characteristics of sole proprietorship. The first one is single owner. So the sole proprietor form of business organization has single owner who himself or herself start the business by bringing together all the resources. No separation of ownership and management. So here the owner himself manages the business as per his own skills and intelligence. There is no separation of ownership and management as is the case with company form of business organization. This I will be explaining later on. Next one is less legal formalities. So there will be sole owner, there is no need to have formalities. So therefore formation of sole proprietor form of business organization is easy and simple. No separate entity, it means that the business does not have any separate entity from the owner. The businessman and the business enterprise are one and the same, and the businessman is responsible for everything that happens in the business unit. No sharing of profit and loss. Yes, that in this form of business organization there is only one single owner, so no other person is there to share the profit and loss. He or she alone have to bear the risk and reaps the profit. Unlimited liability already been explained, where if in case of losses the business assets are not enough to pay off the liabilities, then in that case the owner has to sell off his personal property to pay off the liabilities of the business. Next one is the advantages of sole proprietorship. The first one is easy to form and close. So again it is very simple, it is very easy to form and start this sole proprietor form of business, proprietorship business. How? Because there is no legal formalities required. Similarly, the business can wind up at any point of time. Second point is quick decision and prompt action. So again there is nobody who interferes in the affair of sole proprietor organization. As there is one single person, there will be one owner. So therefore all the decisions are being taken by the owner himself. Direct motivation. So the entire profit of the business goes to the owner only. So this motivates the proprietor to work hard and run the business efficiently to maximize the profit. Next one is minimum working capital required for this startup. So yes, Again, understand this is a small business organization. So in case of small business organization, a minimal amount is only required to open the business. Next one is tax advantage. So in case of sole proprietor business, they don't have the tax burden as compared to other form, because the owner in this form of business is taxed as an individual and not as a business entity. Because in case of business entity, the tax slab rate is different for different kind of businesses. Next one is least expensive form of ownership. Yes, there is no need for any kind of registration fees, therefore it saves money. So that is why we can say it is least expensive form of ownership. Next one is sole beneficiaries of profit. So no other business other than sole proprietor and one person company entitles the owners as the sole beneficiary of profit. Last one is minimum government control. So yes, in order to start a sole proprietor business, there is no need to have any kind of registration or any kind of any kind of formalities or paperwork to start the sole proprietor organization. Next one is disadvantages of sole proprietorship. So the first one is limited resources. So see, understand that being the single owner, it is not always possible to arrange sufficient fund for his own sources. So they have to borrow money from their friends and families, or sometimes they have to take loan from the bank. So therefore, they have limited resources in hand. Next one is lack of continuity. So lack of continuity here means that, in case, for example, suppose the owner of the organization died or any mishappening happens to the owner, then the business will going to shut down. There is no any partner or active partner who will going to take the take the place of the owner. Unlimited liability, already being explained. Unlimited liability means that if the business liabilities cannot meet out the business assets, then the personal property of the owner also be used to meet the business obligations and debts. Limited managerial expertise. So there is only one single person, and one single person may not be an expert in all field. Like in an organization, the owner have to have information about finance, then personal, then advertisement or marketing. So the managerial expertise is limited in this form of ownership. Then the next one is lack of high caliber employees. So again, the profit is being distributed. There is no distribution of profit. There is only one single owner. They hardly hire some other person, and in case if they hire the other person, the amount or the pay scale is less. The last one is decision making error. So since the sole traders take all business decisions without consulting others, there is at times excessive pressure on them. So he is likely to commit decision making error, and a wrong decision may at times becomes damaging for the firm. So these are some of the disadvantages of sole proprietor. Now the next one is partnership. Partner, we are talking about partner. So there has to be more than one person. So partnership is an association of two or more persons who pool their financial and managerial resources and agrees to carry on a business and stake its profit. The person who forms a partnership are individuals known as partners, and collectively a firm or partnership form. Then comes the characteristics of partnership. So before characteristics, let me give you a brief introduction about partnership deed. So when the contract of partnership is being made in writing, it takes the form of a document. That document which contains the term of contract is known as the partnership deed. So name of the firm, name of the partner, nature and place of business, then duration of partnership, profit and sharing or ratio. These are some of the content which is being added, which is added in partnership agreement. Then comes the characteristics of partnership. So the first one is at least two members, two minimum members should be there. So there must be two members to form a partnership. All of them must be competent. It means mentally they are stable and fit. If at any time the member of partners or the number of partners in a firm get reduced to one, then the firm is dissolved. So in case of partnership, there has to be minimum of two members. Next one is agreement. So yes, which agreement basically means the partnership deed. So voluntary agreement is being there. So in that particular agreement, each and everything is being mentioned regardless of the content or the extra effort they do. Then comes the sharing of profit. So sharing of profit of the partnership business among the partner is a must, but sharing of losses by all the partners is not essential. This I will be speaking in the next PPT. Mutual agencies, yes, every partner while carrying on the business of the firm stands in a position of an asset as well as principal. So as an agent, he or she by his act bind the firm, that is all the partners. So as a principal, he is bound by the act of other partners. Then comes the type of partners. So first one is actual partner, then comes the sleeping partner, and the last one is nominal partner. So actual partner, also known as ostensible or the active partner. It means that the one who becomes a partner in the firm by an agreement and who actively participates in the conduct of business of the firm. An actual partner is actually an agent of the business partners of the firm. An actual partner is also a principal for all his co-partners. Next one is sleeping or dormant partner. So a sleeping or dormant partner means a partner who becomes a partner in the firm by agreement but never take active part in conduct of business or firm. Next one is nominal partner. So nominal partner is one who lends his name to the firm without having any pecuniary interest in the business of the firm. Neither he invests money in the firm nor does he share the profit of the business of the firm. But he is liable like an actual partner of the firm to the third party for all the debts of the firm. Coming to the advantages, so the first advantage is easy to form. So a partnership can be formed easily without many legal formalities. There has to be some kind of legal formalities but not many. So there is no compulsion that they have to be that their firm have to be registered. Simply an agreement is being made. That agreement can be in written form or implied to create a partnership form. Next one is availability of larger resources. So since two partners are there, they join hand together, so they will be pooling their resources as compared to sole proprietor. Balanced decision. So all major decisions are being taken in consultation with and consent of all partners. Thus, collective decision prevails and there is less chances for hasty decision. Sharing of risk. Yes, the risk is being shared according to the ratio which is being mentioned in the partnership deed. Then keen interest. So some partners, since partners share the profit and bear the losses, they take keen interest in the affair of business. Benefit of specialization. So there are different partners in the partnership firm. So each partner can have different specialization. Protection of interest. The right of each partner and his interests are fully protected. How? So if the partner is dissatisfied with any business, he can ask for dissolution of the firm and can withdraw from the partnership. The last point is secrecy. So business secret of the firm are only known to the partners. So it is not required to disclose any particular information to the outsiders. Next one is the disadvantages of partnership. So the first one is unlimited liability, already been discussed. It means that partners are liable to repay debts even if from their personal resources in case of business assets are being sell off. Then comes the limited resources. So limited resources, there is restriction on the number of partners and hence the capital invested in the partnership firm is limited. Possibility of conflict, there is so many, if there will be so many partners, every partner have their own perspective, they will be having their own point of view, which leads to create conflict between the partners. Lack of continuity, so partnership comes to an end with the death or retirement or insolvency of any partner. So the remaining partner can enter into fresh agreement and continue to run the business. Lack of public confidence. So a partnership firm is not legally required to publish its financial reports or to make other related information public. Therefore, the confidence of the public in partnership firm is generally low. Sharing of profit. So more the number of partners, higher is the amount of profit which has to be shared. Now, the next topic is joint stock company. So joint stock company is a type of business organization where ownership is divided into shares. It is formed by individual or entities who contribute capital in exchange of shares of stock. The shareholders of a joint stock company have limited liability, meaning their personal assets are protected in case of business debts or obligations. Then we have different types of companies. So the first one is private company, public company, one-person company, dormant company, and holding and subsidiary company. Private company. So private company is basically a business entity that is privately owned and not publicly traded on stock market. So all the private company firms are not being listed on stock market. So it is often owned and controlled by a small group of individuals or family members. Next one is the public company. So public company is a business entity that offer its share to public through an IPO, that is the initial public offering, and is listed on stock exchange. Then comes the one-person company. So one-person company is a type of private company. But how can you differentiate between one-person company and sole proprietor? So understand, in case of one-person company, the company has to register themselves under the Companies Act 2013, whereas in case of one-person company, whereas in case of sole proprietor, there is no need to have any kind of registration. So registration company is known as one person. In case there is no registration and there is only one owner, that will be termed as sole proprietor. Next one is dormant company. So dormant company is a registered company that has no significant business activity. It may be temporarily inactive or not generating any income, but remains legally registered. Next one is subsidiary and holding company. So holding, the word says holding company means that owns a significant portion of share in some other company. That particular company is holding some other company. So the holding company has control over the subsidiary operations and management. These subsidiary companies are controlled by a holding company and may operate independently or under its direction. Then comes the advantages of company. So the first advantage is limited liability. So limited liability means that the shareholders are only liable to the extent of the amount paid on the share held by them. There will be their personal assets are not being used in case of paying the debts. Transfer of interest. Transfer of interest means that the ease of transfer of ownership adds to the advantage of investing in a company, as the share of public limited company can be sold in the market as such can be easily converted into cash in the case of need arises. Next one is perpetual succession. It means that existence of a company is not affected by the death. So in case if the owner or if the members of the company died, or in case they retired, or any kind of solvency happens, that there will be the existence of the company will still be there.